I want to introduce myself. I'm Linda Halloran. I'm the Community Engagement Manager with Town & Country Federal Credit Union, and we're glad you're here tonight with us for this virtual workshop on overcoming debt and rebuilding financial health. According to a number of financial experts, there's about 80% of Americans caught up in the cycle of debt. And a recent Bankrate report found that the average American is carrying over $96,000 in debt, with balances coming from a combination of credit cards, student loans, auto, personal loans, and home loans. So that number does include mortgages. We often hear from members that are dealing with debt that it's not only stressful, but it's getting in the way of them reaching their financial goals. So tonight we've invited two experts to talk about some ways to help get a handle on debt, pay it off, break the debt cycle, and develop some new strategies to rebuild financial health for your future. With us tonight are Brittany Eaton, Town & Country's collection manager, and Tanya Sambatakis, an attorney with Muller Law. So I'm going to let Brittany and Tanya both introduce themselves.
So I'm Brittany. I am the collections manager at Town & Country. I've been at Town & Country for a little over 10 years and in the collections department for almost 8. I really enjoy what I do every day, work with our members, working out in the community to just really help educate about financial health. And I think this is my fourth or fifth time doing this presentation with Tanya. So I hope you are able to learn a lot tonight, and thank you for joining us.
My name is Tanya Sambatakis, and I am an attorney at Muller Law Office, and I primarily represent people and businesses that are overwhelmed by debt and they need to reorganize in some way, perhaps to eliminate the debt. And so that's my primary focus day to day. I've been doing that for about 16 years now, I guess. I think that's right. My math is correct. And I really do enjoy it. You know, we live in some strange times right now with what's going on in the economy. We'll dig in a little bit this evening and hopefully address any questions that you have. And I'll just reiterate to what Linda and Brittany said, and that we want this to be helpful for you. So, which is why we prompted you when you registered to tell us what you were looking for advice on, and we'll try to focus on that.
Just a little background about Town & Country. We are a member-owned credit union. We're serving Cumberland and York counties. And we do have 6 branch locations: Portland, South Portland, Scarborough, and Saco. We really pride ourselves in helping people. We've been helping people navigate financial hurdles since 1953. And we are a full service financial institution with 40,000 members and continue to grow. So today, what you learned today, as both Linda and Tanya said, debt can be a significant obstacle reaching your financial goals. Today, we really want to try and give you tools and options and strategies. So when we're going to talk about how you can recognize when you're a little too deep into debt, some strategies to try and break that debt cycle, some debt relief options, and also steps to rebuild your financial health. And again, questions, we love questions, so feel free to just stop anytime. We'll stop and answer any of those questions that you may have.
Thanks, Brittany. So as you can see on the screen, this is a snapshot of consumer debt. So that's what all of our debts are, unless we're businesses. It's consumer debt. And this is from Experian last year. They haven't updated their stats for this year quite yet. I do have some updated numbers to share that are a bit staggering, but as you'll see here, and as Linda mentioned, it's not insignificant. You know, people have debt. If you're struggling with debt, you're certainly not alone. I took some notes. There was a report just out a couple of days ago that the last quarter, so just a month or two ago, consumer debt has risen to $16.51 trillion. That took me a minute to process because that's a staggering number. And it's the highest it's ever been. It's over $2 trillion higher than it was pre-COVID. So at the end of 2019. And unsurprisingly, the credit card balances for all of us have increased 15% from this time last year. So that's, again, not insignificant, because most of us, and if you have, good for you, but most of us haven't experienced a 15% increase in income. But so it's a little scary when the credit card balances have increased. And again, unsurprisingly, the default rates, so the loans that are not being paid, have also increased year over year. So all that's to say, if you're finding yourself looking around and wondering, how did I get here and why is my debt increasing, you're certainly not alone in that evaluation.
Absolutely. Yep. So life happens, right? So, I mean, if you look at this list, I'm sure there's a lot of you, probably all of us, that have gone through at least one of these life-changing experiences. Maybe you've gone through multiple of them, and you just really didn't know how to navigate through them. I mean, inflation is a big thing for all of us right now. Gas prices, oil, groceries. How do you even handle that with already a limited budget? Maybe you've been recently laid off and you're waiting for unemployment to come, or you change jobs and you've had a lapse in pay. How do you get through that? Another thing that we see a lot is an unplanned emergency. Maybe you had to replace a furnace or get 4 new tires. I'm dealing with that myself. I wasn't expecting. So how do I put that into my budget and not increase my debt? So we're going to kind of give you some tips and tricks around that.
Great. And again, this is another one of those that, you're not alone when this happens. Divorce rates apparently have increased. I don't think it's because of COVID, but it probably had something to do with being locked down with someone that you may or may not want to be locked down with. So, a lot of, people were still getting sick and just not going to the doctor because they just couldn't. So things are getting, they've been kind of ignored for a little while, and things are all kind of coming to a head now. So it's just one of those things that everywhere you look, I'm sure you've found it personally, that, your friend is going through some unexpected illness. Brittany mentioned the tires, the unexpected expenses, divorce, separation. It's just, and all of those wreak havoc on your finances. And of course, that's the last thing when you're thinking about, your health and your safety and kind of your future, but it is a factor, and it all is impacted by what's going on around you.
So personal impact of debt, those scenarios that we were just talking about, can definitely make you feel a lot of things. Feeling stress and anxiety. I think many of us, including Tanya and myself, we were talking about the other day that we're feeling this financial stress and anxiety too. Just the media, everything, it's a lot. So how do you know when you're getting into trouble, or how do you know when you should start making some changes? Are you seeing an increased use of your credit cards? Are you always grabbing for that credit card instead of your debit card? Are you getting calls from creditors very frequently? Are you seeing your savings account just drain quicker than you've noticed before? Or maybe you're unable to cover those unexpected expenses. I think a lot when you start to see those signs, it's time to maybe take a look at the budget, and we're going to be talking about budgeting. I mean, I work with members all day long that it's a lot to even just take that step to give us a call. I just worked with a member today feeling a lot of stress, and finally was like, I finally called in because I'm just getting overwhelmed with all of these bills that are coming in. And it was just a conversation of a budget, that she went from 2 incomes to 1 because her husband had to leave his job to take care of his sick mom. So we kind of just looked at all the stuff, all of her bills, to try and lower her payment on a personal loan. So she was able to see those signs. It took her a little bit, but she picked up the phone and is really trying to just be proactive and not feel that personal impact of the debt.
It's really hard, especially if you're married or you have a partner. A lot of times, you don't necessarily share the extent of your debt. It's just because you're married or you otherwise share your life with someone doesn't mean you share the debt. And that is an extremely keeping that secret is extremely stressful. You two may deal with debt differently. One partner may not be bothered by it and the other may not be able to sleep at night because that's all they can think about. So it creates tension in your relationships too because of the impact of the debt. And it gets to the point often when the bills are coming in and you know what the bills or who the bill is from, and you know you're not going to be able to pay it. So it often goes unopened in a drawer, in the trash can, in a plastic bag, somewhere where you don't have to look at it because you know there's nothing that you really can do about it at this point.
Yeah, absolutely. That segues perfectly into the slide that we love, that it's just take a breath and begin. Just take a second. We're going to talk about the next couple of slides, strategies to get out of debt or attempt to get out of debt and break that debt cycle. A lot of when we had asked what you're looking to get out of this presentation, a lot was to be debt free. So we're going to try and talk about that, but it's a lot. Getting caught in the spiral of debt, it happens over time. You didn't just go to bed and wake up and you had all this debt. So you have to think about it in a way that to break that cycle, to start tackling your debt, it's going to take a little while. So just be patient, take that breath and begin just looking at everything. So commit to change, Tanya.
Yeah. So it's hard to get here, right? It's hard to get to the point where you feel like you're mentally and emotionally ready to deal with it. And don't feel helpless. So when you're there and there's no right time it's just based on when you are ready to get there. I find that the best thing that you can do is one, to have a goal, and two, to make a plan. And kind of the rest will fit into place. And as Brittany highlighted, the goal really needs to be realistic. The debt wasn't incurred overnight. It's not going to be addressed overnight. There are long-term solutions, some shorter than others, but still it's not going to be immediate. The other part that, as far as making a plan, and we'll talk about budgeting strategies and get into different ways to kind of tackle debts, but it's also helpful to have a support system. If you're used to going out every Friday night, or do people still go out anymore? I don't know. But in theory, you may have to change some behaviors, and that's hard to do. So part of that is to have a support group around you so that you can make these changes and you can tell your friends, I can go out, but I have a budget. And so, I'm not going to be able to go out all night again if people actually do that. So, and you can see on the slide, it all kind of flows from there. So it's hard. It's not easy by any means. But there are people and organizations that can support you. One, your friends can support you. Your partner may be able to support you. Town and Country is amazing in supporting you. And, if you need a debt consolidation or a debt settlement situation or attorney, you can always search out for that type of support too. But I think the support is really important because it's not easy to get through all of it.
Yep, absolutely. So next, breaking out of the debt cycle. So this is big. I think it's hard. As Tanya said, trying to get that support system and sticking to a goal is important. So being patient and just changing your habits gradually, I think is really important. Because if you're used to going out or getting your nails done every month, or things that we'll talk about needs and wants, is going to be hard to just completely stop. So just changing them gradually is going to help, not make it so overwhelming. So trying to stop accumulating debt, putting those credit cards away and only spending money that you have. I think I tell members a lot of the times, if you're going to put on the credit cards, there's rewards, and I get that people want to earn those, and that's fine. As long as you're paying it off before the end of the month, before those interest rates hit, that's helpful. That's a small thing to start if you still want to earn those rewards. But just making sure if you're using a credit card that you actually have the money to pay that. We're getting into the season of obviously the holidays, shopping, and just want to be mindful of that to help break you out of that debt cycle. And evaluating your spending habits, knowing where your money goes and tracking your spending is a really big thing. We'll talk about creating a budget in the next slide, but just knowing where your money goes. When you write it all down, it's kind of like mind-blowing to be like, oh my gosh, I'm spending that much each month. And I use nails as an example because I'm a person, I like to get my nails done. So it's the needs versus wants. Do I need to get my nails done for $40 every other week? No, but I want that. So are there times where you can say, all right, I don't need to do those certain things, and I can put that money aside in a savings or start to pay down your debt. And another thing is just knowing what you owe. Doing an inventory of all your debts, I find is really hard, but super important. Working with members, a lot of the times we'll try and start a budget and they're like, oh, I don't even know how many credit cards I have, or I don't even know what my balance is on my personal loan. So knowing that, I think, is important to figure out where you can start to try and pay down certain debt, I think, is important. And continuing that, creating a budget, knowing when the money is coming and going each month. Again, I find very difficult for members. I mean, I've done it myself. It's hard to really think about all the bills you have, and it can be overwhelming. But it's a really, really important piece to write that down to then be able to establish a budget. Where can I put more money towards this credit card to pay it down? And it will help you build a savings account. That will reduce your resilience on those credit cards and create an emergency savings for you for those unexpected emergencies that do come up. And another thing of breaking the debt cycle is accelerating your repayment plan. So can you pay a little bit extra? Did you get a raise? Have you gotten a second job? Can you pay just a tiny bit, even if you start small? Many times I tell members, they're like, only $10 a week a paycheck I'm going to put towards my credit card. Well, that's more than you were doing, and that's going to add up. So just thinking about, again, that starting small, so it's not so overwhelming. And the next thing, living within your means. It's kind of the same with the credit cards. Don't spend more than you earn. That's when a lot of people start taking out those credit cards, racking those up. If you're looking to break out of that debt cycle, you've got to focus on living within your means.
I want to jump in here and just kind of talk a little bit about budgeting and how to create a budget.
Yeah.
I know a lot of folks were interested in kind of talking about that, and there are different strategies to do that. There are a lot of different apps that are out there that can link to your bank account and categorize your expenses so that you can see where you're spending. That doesn't work for me. For me, I'm a notebook and pen and different markers type of person. I like to actually write it down. That has more impact for me, and others use an Excel sheet. And when you're starting to make a budget, it's really easy to put the fixed expenses in, right? It's your mortgage, your rent, your card payment, maybe your personal loan, maybe even your electric bill for the moment until it increases by like 200%. So, I mean, it's really easy to put those expenses in. The hard expenses to categorize are Amazon. I don't know what I buy on Amazon, but I buy a lot. And it's really hard to categorize that because, some of it's probably gifts, some of it's household things, some of it's toiletries and it's hard to break that out and really have a sense for what you're spending. but it's really important too, because if you're going to be serious about trying to figure out what you have for excess money to pay off debt sooner, the first step is figuring out where your money is going now so that you can decide if that's something you want to continue or not. Because you might decide, Amazon makes me happy, and so I like to spend $200 a month on Amazon or Target or whatever.
Yeah.
And so then that's built into your budget, right? That you understand that that's a cost. And until you sit down and have that hard conversation about budgeting and those variable expenses like birthday parties, kids activities and clothing, because you don't buy it every month in theory. And the expenses are variable. And, to add insult to injury, you might be looking at your historical budget, right? You might be looking at what you paid for electricity or heat last winter. And now it's going to be a lot different, right? Because everything is so much more expensive. So it's a hard thing to do, but it really sitting down, and for me, again, pen and paper works best for me. But if the app and the categorization works for you, then, have at it. It really, there's no right or wrong way, as long as you're looking at all of the expenses and breaking them down to figure out what they actually are so that you can make the decision as to whether or not you want to continue with those expenses.
Yeah, and we, Town and Country, we have a free budgeting tool on our website. We have a whole financial wellness section on our website, and it's a very detailed budget. We use it with members all the time, but it's breaking it down to like pet food, like Tanya said, clothing, very, very detailed. It's hard, but it is helpful if that's an easy way for you to look at your budget. Another thing too that we remind members, like all the streaming services add up. So we'll make sure we add those in the budget. And just also, she said Amazon and Target. My debit card is attached to that. So it's so easy that I'm like, just buy it. So thinking about those little things, like, is it almost too easy for you to go on Amazon and buy all those things, can also help with the budget. Debt repayment strategies.
So there are different philosophies. Most people will tell you to pay credit card debt off first because that's generally the highest interest rate. So then, of course, the question is, okay, well, great, but how do I do that? And there are two main methods, both somehow winter related, I think, but snowball and avalanche. And it really, neither is better or worse than the other. It's about what makes you feel like you've made progress. The snowball method is the idea that if you have 5 credit cards, $100 balance, $500 balance, $1,000 balance, $2,000 balance, $3,000 balance, pay off that $100 credit card first, because you'll feel accomplished, right? That you've paid off then move on to the $200 one and pay that one off. And so you're paying the minimum payments on all of them, but you're throwing every extra dollar on the smallest one, and it snowballs, get it, on each other. So eventually you'll get to the highest balance one. The snowball method does not account for interest rates. It's the psychological effect of paying off a debt. And if you think about that and you're hearing us talk about it and you think, wow, that sounds great, I think I would feel really accomplished doing that, I don't want to think about the interest rate, it's too much for me to even think about, then maybe this one's for you, the snowball. The other one, the avalanche method, that is that's focused on the interest rate. And I have a lot of clients that are very focused on the interest rate of the debt. And if that's you, then this method might be for you. Because what this does is, again, you're paying the minimums across the board on everything. if you can, and that's a whole other thing, but we're going to assume for conversation right now, you're paying the minimums. And then you're going to take every single extra dollar and pay it on the highest interest rate card, regardless of the balance. Because in theory, the highest interest rate, you're going to be paying the most on that card over time. So if you get rid of that one first, the rest will follow. You'll knock it down and you'll knock down the others. It makes me think of like a bowling alley too, like if you're bowling, but it's like that same idea. Is once you hit one down, you'll hit the others, and you're going to start at the top. You're going to start at the highest interest rate. Again, neither is right or wrong. It's what will make you, what's accessible to you, what's interesting to you, what will allow you to feel like you're making progress and being able to move forward. What makes sense for your plan. The other ones, their consolidate debt or refinance are kind of the same, potentially, especially with these credit cards with higher interest rates. If you're eligible to get a personal loan and consolidate the 18, 19, 25, 30% interest rate credit cards at a 7% 5-year loan, well, that probably makes sense, assuming you can afford that payment on a go-forward basis. But those are really good options. What I always warn people on with those is that you don't want to bite off more than you can chew, though. And what I will say about Town and Country is that they're really realistic about this, and that if you go in and you sit down with someone at a branch and you say, here are all my credit cards, I want to consolidate them, give me a personal loan, and thank you very much. They may look at you and your debt and say, I don't think that's a good option for you. I think the payment's going to be too steep. And they might even tell you, maybe you should talk to a bankruptcy attorney. And so Town Country isn't scared of the word bankruptcy, even though it's a scary word. And they're very realistic. And I think it's helpful to have kind of a neutral party look at your debt and say, you know what, maybe that consolidation plan isn't the best given where you are right now.
Yep. Yeah. And Tanya, you make a good point too, because being collections, you would not think that we're the ones doing consolidations and refinances. That would be your loan officer, but our department, every day we're helping members consolidate, look at their budget. What can we do to get them a lower payment with refinancing? What can we do to consolidate your debt? Maybe it's a credit card and a personal loan into one to start paying down everything. So I think the number one thing is just to reach out for help, because you never know what we can do to help you. The debt collection.
Debt collection. Okay, now we're really getting into the dirty details.
Yeah.
So the last slide, we assumed you're making your minimum monthly payments. Well, we're throwing that assumption out the window now. We've moved on. Now you can't afford to make the monthly payments, and you're starting to get phone calls. So once you stop being able to make your payments, the initial phone calls are going to come from the creditor. So for example, if you have a personal loan with Town and Country and you're unable to make those payments, Town and Country is going to start calling you. And they're not debt collectors, they're your creditor. And so there are different rules that apply because they're your creditor and not a debt collector. So they're not debt collectors. I think that's really important, because there are rules for debt collectors that don't apply to your original creditor. So that's number one. Number two, I love this question, is what is a charge off? I get this question all the time. When someone pulls their credit report because they've done what Brittany suggested that they do and figure out what's out there for debt. You know, how much do they owe? Who do they owe? And they pull their credit report and they see all these charge offs, and they get excited because they think, well, it's a charge off, then that means I don't owe the money. No, I'm sorry. I wish it were so easy. A charge off really is just an accounting tactic for the original creditor. It has zero to do with whether or not you still are responsible to pay the debt. So if you see a charge off, I hate to be the bearer of bad news, but it does not mean anything good for you. It means that the creditor probably wrote it off on their books, so that they're not carrying a bad debt on their books. So sorry to say that. Which leads into, well, when don't I have to pay this? And that's called the statute of limitations. So I think most people hear about the statute of limitations when it comes to criminal stuff, as far as if you do something, there's a certain amount of time for you to be charged. If you stole a pack of gum when you were 8 and you're now 35, they cannot come after you for that stealing of that pack of gum because of the statute of limitations. And the same theory applies to credit cards. The credit card statute of limitations is 6 years. And your question for me is, well, when does that start? And my answer is when you last used or paid the card, whatever was the most recent. So if you stopped using your credit card a year ago, but you stopped making payments 6 months ago, the statute of limitations, that 6-year window, begins 6 months ago. And during that statute of limitations, so during those 6 years, you're going to get calls from the original creditor. Then you're going to get calls from the debt collector. And you might even get sued. If you do not get sued within the 6 years, legally, you are no longer responsible to pay that debt. So that's great, except for the debt forgiveness that you see on the slide there. So a creditor could charge it off, which we now know means nothing really from your perspective. And then they're approaching the end of the statute of limitations and they say, well, we don't really want to pursue Tanya for this debt, so we're going to forgive the balance of $10,000. And I get a notice in the mail from the creditor that says, we're not going to pursue you for this $10,000. And I get really excited. And then in January of next year, I get a 1099 from that same creditor that says, I now have $10,000 worth of income that I need to address in my tax returns. It's a really sneaky little thing that they do, and it's called forgiveness of debt income. As with most things, there are ways to deal with it, and you would have to talk to an accountant, CPA, to make sure that things are addressed properly so that you either pay taxes, or if you fit into an exception, you don't have to. But I often will talk to people who get really excited about it's charged off. I'm almost at the end of the statute of limitations. Then they've forgiven the debt, and none of it is great. It's not terrible, but it's not great. The level of excitement that they tell me all of this does not match with actually the reality, unfortunately. So again, these are things to be aware of. You can deal with all of them. You can certainly address it all, but I think knowledge is key and being able to make a decision and a path forward.
Yep. Yes. And to know that we at Town & Country, in my department, we are not debt collectors. So just keep in mind the financial institution, we get that a lot, that you need to stop calling me, you're debt collectors, but we're different. And we're very nice. We're not as sometimes mean as the other debt collectors. So
they are very nice. Yes.
So we need to reset, and you need to know your options. So with all those things, you've started your budget, you're taking a look at your finances. So now what else can I do? Maybe there are options, like you're not able to do a consolidation, and you just don't know what else to do to get help. Or maybe you had that emergency that you weren't expecting, you were out of work because you broke your leg, and you just need some relief. So there's a couple options that we help members with, and also Tanya helps her clients with. So in my world, loan deferments, we helped many of our members, hundreds of our members during COVID with loan deferments. No one knew what was happening. Everything shut down. People were without income for a couple months. We helped them with no payments for sometimes 90 days on their mortgages. There are times that we help members, even if they have to get 4 new tires on their car and they need 3 months off of payments because they need to use that money to pay for something else that was unexpected. Many times we help members, they just had a baby. And they need a couple months just to not have those payments. So that's always an option to just reset, or maybe you even just need it. You've created your budget, you've sat down for a plan, and you just need a second to breathe. So a deferment could be a great option for you. We also work with members with debt settlements, which would be you come to us and maybe you can't afford that monthly payment month after month, and you looked at your budget and you're just trying to clean up some debt, and your really only option left is to try and settle out that debt before maybe you go into a bankruptcy, for example. So coming to us, we can help you and see what it is. If you have like a $2,000 credit card and you got your tax return maybe, or you came into a lump sum of money that you were able to pay off some debt, the process for us is working with you. We figure out a plan that works for both of us. And then we would code your credit report as a settlement. There are other companies out there that we also work with, that we've seen members work with, that will help you do that. I say to come to your financial institution first, before you go to those companies, but sometimes that is the last resort. And then foreclosure, if that is something you do have to go through with your home, we'll work with you. It's not the end for you, but sometimes again, it's your only option to reset and to start over. And then obviously Tanya can talk more on the bankruptcy piece of things.
Yeah, and on the debt settlement, I would just warn you. I hear a lot of advertisements either on the radio or television, and they sound fabulous as far as what they promise to do. And they even try to create kind of this elitist where like they don't want to talk to you unless you have debt above a certain level, to make it seem like they're really great at settling debt. Like, don't talk to them unless your debt's over $50,000 or something like that. And the old adage, if it's too good to be true, it probably is. My biggest advice with the debt settlement is that don't sign up with a company in California or Florida or who knows where. If you want to do debt settlement, it is a great option in a lot of different situations, and we help folks work through debt settlement all the time. But go sit down with someone that is an actual real person and isn't a lawyer in California, which means nothing in Maine. It means that they're probably practicing law without a license, which is a crime. So just be really, really careful with the debt settlement places that, you'll get a pop-up online, or you'll get something in the mail, or you'll hear something on the radio. And again, they sound fabulous. They really, really do. But I can't tell you the number of times we've seen people sign up with these outfits, and they're promised the world and they literally get nothing, except they've lost a lot of money and they're in a worse spot. So just kind of a cautionary tale. But that being said, debt settlement is a fabulous option for a lot of people. But you just have to be very careful who you hook up with to help on that. And then, sometimes none of that works, right? Sometimes you just, whether it's you were working, had a fabulous job, and now unfortunately you're unable to work, right? And no deferments or settlements are ever going to touch, your debt level, because your income is never going to be back at the level that it was. And so in those cases, bankruptcy could make sense. And it's, most bankruptcy attorneys will sit down with you for no charge for an initial meeting. They'll look at everything, and all reputable attorneys will tell you whether or not it makes sense. They will talk through all the options we're talking through tonight as far as debt settlement, debt consolidation, or bankruptcy, or nothing, or some other version. And you deserve to have all your questions answered. And you deserve to ask the questions too, so that you know you've exhausted all of your options. But bankruptcy looks different for everybody. So if your cousin's neighbor filed for bankruptcy and in theory then went to Hawaii the next day, which doubtful, but that's probably a story that they're peddling. Don't believe everything you hear. Sit down, talk to someone who can evaluate your circumstances in your situation, and you can come up with a plan, going back to that plan together. And a lot of times built into kind of a bankruptcy is looking at your budget, right? Sitting down, going back to that whole budgeting thing that we've been talking about, and looking at your historic budget and what you've been spending, and is that what you want to or need to be spending going forward. I enjoy working through clients' budgets with them as we go through a bankruptcy process. And, I had a client who she adopted the envelope approach to budgeting. And for those of you that don't know, she literally had an envelope, paper envelope, that at the start of every week or every month, she would put a fixed amount in. So one envelope was for groceries, one was for gas, one was for fun. But there was literally an envelope for each category, and she wouldn't spend any more that was in that envelope on that expense. And a lot of times she had extra, and then she'd take that extra and put it into a savings at the end of the month in a new envelope. And that worked really well with her, for her, because she was like me, she liked the paper and pen approach. So the envelope method worked well for her. A lot of people will adopt a similar approach, but maybe using different bank accounts. So they'll have a fixed amount going into a certain bank account, and that will cover their car payment, their car insurance, their car registration. And so they know what that is every year. And so every couple of weeks when they get paid, the amount goes into that bank account. So it's a similar strategy. Again, it's what works best for you, kind of your affinity for either using bank accounts or paper, and you can determine what makes sense there. But none of these solutions or resets are their own on their own island, right? They all can work together to help you move forward.
Yes. And touching back on bankruptcy, Tanya had mentioned in the beginning, Town and Country, we're not afraid of bankruptcy. Some attorneys will tell you if you file bankruptcy to just cut all ties from your financial institution. They're not going to let you keep your bank account. They're basically going to look at you like you're awful, but that's not the case at Town and Country. Life happens, things happen, and sometimes you do need to do this, and it's okay. Bankruptcy is scary and overwhelming, but we look at it as life happens, and we're not just going to cut you off. We're going to work with you. Many of our members will still keep their accounts open. It's that open line of communication. So just know if there's some of these options to reset, it's okay, and it's not the end. You'll still be able to get credit down the road. You'll still have your bank accounts. So just keeping that in mind.
And, I'll add to that. I mean, Brittany knows how many people we send to her to say, can you look at them for refinance or something? And and they may or may not qualify for different reasons, but the bankruptcy isn't going to be a disqualifier. And a lot of my clients, when they ask me, how do I rebuild? Where do I go? I know that about Town and Country, so I'll suggest that they open accounts at Town and Country, because I know they'll be given a fair shake down the road, and not just looked at and said, well, you have bankruptcy, we can't help you for, fill in the blank, 2, 5, 10 years, whatever the case may be. So, Town and Country will look at your whole financial picture, and not just pick out, maybe something that wasn't the highlight of your financial history, and for it. So,
yeah. So everything that we've gone over tonight, we've gone over a lot. Moving forward, I think we've covered a lot of talking about budgets, shifting your mindset. I think the number one thing to think about is just having a goal, working towards something. Is it trying to be debt free? Is it trying to pay down some of those high interest credit cards, those different methods that Tanya talked about? Just having a goal, or maybe it's just to simply have a savings account for unexpected expenses. So just taking those small steps, not trying to change everything overnight, so then it's not so overwhelming, I think is important. Many times with members, I tell them we set up sub accounts and you create them kind of like the envelope method, but in sub accounts to your bank account and naming them taxes, gas, groceries, and members will set aside funds so they know they can kind of see it. Or it's a vacation account, and every paycheck they start off with like $20 a paycheck. And then they start to see it add up, and then they start to put more in there. So just small little things will also help shift your mindset from spending all the time to start paying off your debt, start saving, start building that up. And savings, I think we're finding after COVID with everything that it's pretty important to have. And we are finding members are trying to be proactive because we went through some crazy times. We're going through some crazy times. So trying really to prioritize that when you get to that point, when you can, automate your payments to a savings account or your loan accounts. Set it and forget it. Try not to look at it. I mean, we have members that name their sub accounts don't touch or keep out. And I mean, they can still touch it, but they putting it in capital letters helps them not touch it. And then just celebrate your progress. Recognize the changes you're making and your progress to reach that goal, I think is really important. Those small changes, again, members like, well, it's only $20 a paycheck, but I mean, $20 adds up after a month, after a year. So really feel good about that, the progress that you are making with all that. So I think too, Tanya's going to touch on, but I'll just say that reaching out for help is super, super important, especially in the collections. People just don't want to reach out to us because they don't think we can help, but that's what we do every day is to help. So I think that should be your number one takeaway, reaching out for help when you feel it, that debt coming on.
Yeah, it's really hard to do that because there's so many layers to that. We have self-imposed shame and guilt and feel terribly about the situation. Those are your feelings, so I'm not going to say that they're unwarranted or unreal or not real. But I think you're definitely harder on yourself than anybody else is. And once you appreciate that and maybe take a little bit of a step back and realize that there are people out there whose their job is to help you. I mean, that's literally all I do. That's all Brittany does. I mean, that's what we do. So that must mean there are more people out there facing this than just you. And so, we have some examples of, folks that are out there that can help you, trusted friends, maybe don't believe the cousin neighbor story, but, trusted friends might be able to give you a few pointers as to who to talk to if you do need some help, and just having a sounding board. A lot of people, we don't have it up here, but a lot of people, their church community are really helpful. And that's one of, again, it just depends on who your community is and who you trust to help. But you'd be surprised how many people are dealing with this. People with $16.51 trillion. So a lot of people are dealing with this. So
yes. And then we've just listed some financial resources for you to take a look at. So annualcreditreport.com is great. It's a place that you can look at your credit, pay attention to that. And I mean, it's a place you can make disputes on there if you see something you don't think that's yours, but it's just a great way to look at your finances. Town and Country offers Savvy Money, so you can see your credit score on there. You get a free credit report. money management apps, like a budgeting tool. Town and Country also offers that through our online banking. Great tool for budgeting. And some other things, studentaid.gov. Right now, if you do have student loans website, you can go on to try and get some debt relief from that. And other financial wellness programs. Bonsai is something, Town and Country, we also offer that as well on our website. And just looking at some government agencies too, to have some resources for you.
Yeah, there's a lot of agencies out there. York County Community Action is fabulous. Avesta Housing, also a great organization, and they can help if you have mortgage issues. Or the Bureau of Consumer Protection, they're a good resource as well. And especially if you're thinking about signing up with one of those debt settlement outfits that I cautioned you on, the Bureau of Consumer Credit, which is part of the state of Maine, vets these places and can tell you if they're legit. Or maybe you should be thinking about something else. So there are a lot of, like I said, there are a lot of different resources out there. Stay local is my biggest tip when you're looking for help, though.
Yeah, absolutely.
Buy local.
Yeah.
So most of those were all free resources, but you understand where we are with that.
And also our contact information is right up there on the screen. So you can contact either myself or Tanya if you have questions that you think about after this, or you don't want to ask right now. Feel free to email us and we can help you.
Yeah, absolutely. And if we can't, we can direct you to someone else. So don't be shy asking for help. We're all local.
Yes.
Yeah. A lot of information. Thank you very much, Brittany and Tanya. And we thank you all for joining us, and have a great night.